What's good, y'all? It's HB Punch and Profit. Let's break down the price action from today. I did not trade because this is the day before NFP. Price action can be very tricky, and it was. Not to say that there's not any opportunities on days like this, because there are, but by the time you find one, you may have blown out your account, or psychologically you may start going into revenge trading because you fumbled one trade, and you know how it goes. I've been there, you've been there, and I would say probably most traders have been there. But if you did decide to trade, obviously you have to understand that your strategy is not going to look like it normally would on a normal day of trading, right? You might have to deal with more drawdown. Your profit target may not be, you may have to be very modest in your profit taking and for the target you're aiming for. And but if you can manage your emotions and you can manage your psychology, there are opportunities, but you have to be very patient, and you have to be willing to accept a loss or two in the process, okay, or missing a big profit target. So let's start off at the 950 to 1010 macro. And one of the reasons I also decided to, before we get into it, one of the reasons I decided to stay out of the market today is because this week has just been that type of week with the economic calendar. I already noticed yesterday when I took a trade, I had to deal with a lot of drawdown that I'm not accustomed to dealing with my strategy. Okay, so that made me very wary of today. It's like I don't want to deal with that type of drawdown. I don't want to risk my accounts. So just stay out for today. Okay, but let's break it down. Let's see what the market presented. Let's go to the first macro after 9:30. Okay, now I see here, if we zoom in, that we had a, and I'll mark out these bearish and bullish fair value gaps very precisely. So we get this bearish fair value gap right here. Make sure you take into consideration volume imbalances, right? That's a bearish fair value gap. Boom. And it gets overlapped by this bullish fair value gap right here. And make sure you catch that volume imbalance. Okay, so there's your inversion. You get your advanced market structure shift right here. Okay. And you do get a decent push up, but guess what? You get this wicked retracement, this wicked pullback, okay? Depending on where you entered, whether it be after this yellow line or at the yellow line, or maybe if you were very bullish in your high time frame narrative, you did it right after the close of the inversion, right? You would have had to deal with some drawdown. And on a day like this, if you do decide to trade, get on the micros and play it very safe. This is not a big deal if you're on the micros, right? You could have put like 3 micros and only dealt with like 13, 12 points of drawdown. That's nothing, right? Now you could use one mini, it's not that big of a deal, depending on your account size. But on a day like this, you should probably just play it safe and use micros, especially if you're new or you're trying to change up your strategy and implement this. Use the micros. This is not a big deal, a pullback down here. And if I was trading, I'd be on the micros. I'd put my stop down here just to give me some room to breathe, because it's the day before NFP, right? Unique calendar event. I need to give the room space because it's going to want to seek and destroy, okay, which it was doing. It was chopping, okay, and it does push back up, but then it comes back down, right? And this would have been a good opportunity. Coming back here would have been a great opportunity to kind of maybe manage your trade, maybe take a partial at some point, or bring your stop to break even, okay, knowing how price action is going to be on a day like this, right? And maybe if you manage your risk, you wouldn't even have to take a loss, right? You could have gotten a free trade and see if it went anywhere, okay? But say you kept your stop at the low and you didn't move it, you would have been stopped out, okay, eventually after all this chop. But you should know if price isn't exploding to the target, then it might be a questionable trade. Okay, if it's very high resistant. So first one did not work out. No big deal if you didn't over leverage. You would have survived. And if you kept your cool and just waited for your next opportunity, everything would have been fine. Okay, you get to this 1050 to 1110 macro. Nothing presents itself. No inversion, no advanced market structure shift. Absolutely nothing. Okay, so that gives me, if I'm in this market, that gives me a little bit of confidence in the next macro that we're probably going to get a good setup. And we get this, let's see, bearish fair value gap right here. Okay. Bearish fair value gap right there, volume imbalance. Don't forget. And you get this bullish fair value gap that barely overlaps it right here. Okay, make that green. That's your inversion. You get an advanced market structure shift up here. And it looks like this is a beautiful setup, and you wouldn't have to deal with a lot of drawdown as well. That's where you would put your stop on a day like this. You want to give your trade room to breathe. Do not over leverage. And typically, right, on a normal day, I would want to make my stop tight. Depending if I got in after an inversion, I would have brought it up, or after that advanced market structure shift, I want to keep it tighter. But a day like this, got to give the trade room to breathe, even though it worked out this time. Now, what are you aiming for? On a day like this, I'm not aiming for 50 points. Okay, I'm not aiming for 50 points. On a day like this, I'm looking for low hanging fruit. Okay, which could have been here, could have been here. Okay, I measure that out and I get a rough estimate, right? Maybe I cut it in half the target that I usually would go for, because this move all the way up did not hit 50 points. It only hit about 40 points. So just aim for low hanging fruit and take partials along the way. Maybe you put 3 micros on. You take one right here at this short term high. You take another right here, right? That's 2. You get 2 off the board, and then you let one run. Okay, you gotta understand that. So take profit however you wanted to skin the cat. Boom, would have been right roughly around there. Okay, boom, and then let one run to try to recover whatever you lost in this macro. So you got to kind of get creative when you take a L, if you do take a L here. Okay, so now this is where the big move happened. Didn't happen in one of our key time periods, so I would have missed this trade unless I stayed at the charts. Usually I like to get off by this last macro, but there was a monster move here. So you take all the highs, you sweep all the highs, okay, and you get this bullish fair value gap along that way. Volume imbalances, make sure you don't miss that. Bullish fair value gap inverted by this bearish fair value gap. Okay, and all the while in the same candle, there's this advanced market structure shift. So we'll move this up a bit just to clean up the look. There was an inversion there, and you get your advanced market structure shift right here. Okay, and you get this monster move with little to no drawdown depending on where you entered. Okay, I wouldn't have taken it at the inversion with the NASDAQ making all-time highs, but if I did see this trade, I probably would have taken it after the close right here. Boom. Or put a limit order at the yellow line. So let's say hypothetically you got in here, you only had to deal with like 6 points of drawdown, even if you got a late entry right here. And look at this massive move down. And that right there, if you kept your composure throughout the day and you saw that opportunity, I think it goes further down than that. Look at that. Over 100 points. Boom. 114 points. Now, let's say you had one mini. Okay, that's over $1,000 depending on how you want to shake it. Okay, or let's say you just traded 3 micros. Let's say you lost here, okay, with 3 micros. So you probably would have lost about, let's say, 6 times 20. That's about 120, right? 6 times 20. Yeah, 120. Say you put 3 micros on here, $120 lost. Boom, you're out. You recover a little bit right here. You get about 25 points. Let's see. Let me see that again. You got here. Yeah, about 25 points. So you'd have pretty much made up your money here with this one if you were modest on your target. And then if you saw this one, you would have had a banger. Okay, you'd have had like $500 if you had 3 micros and you aimed for 50 points, or you left one running even a little bit more. So that's the name of the game, folks. It's not about being 100% correct. It's about managing your risks to continue to give yourself an opportunity to let your strategy and your edge play out. Because even if you do take a loss or two and you find that big play right here, okay, you can recover all that money back and more. I could have, even if I lost this, right? Let's just, or missed the opportunity right here, and I had this loss for that. All that money would have been made right here. Manage your risk, give yourself the opportunity to play the game until you hit it big, right? And rinse, lather, and repeat. That's the name of the game. Unfortunately, you're not going to become rich overnight, but this is a good signal. This signal only presented itself one, two, three, maybe 4 times, but I wouldn't have taken over here. Okay, 3, 4 times. Even if you did take it over here, you still could have made all your money. So even if you have no idea what the higher time frame is, and you just play every time you see that signal, at least in the silver bullet, the macros, or maybe throughout the New York session, right? You're gonna get one, okay, that's gonna hit big. And a lot of times when you're trading on normal days with no calendar events, those trades are going to be the first signal is going to that is presented is going to be a big opportunity, and then you're done for the day. But when you have days like this, tricky calendar days, you're going to have to stay steady, stay calm, stay composed, except if you lose a trade, and wait for the next opportunity. It will come like it did here, and boom, all the money back and more. Okay, so this is HB, punch and profit. Comment down below, like the video, subscribe. Peace.